everybody? It's Jonah coming back at you on a video. So with this video, I wanted to do a trade breakdown for this past Friday, Friday, March 14th, right? A trade that I took that resulted in a loss. But the interesting part about it is it could have been a win and it could have been a good win, a big win. Um, but we'll talk about the what happened, the actual details in between. So end up in a loss. Even though I followed my strategy, but of course I could have done things differently and managed to trade differently, which could have resulted in a massive win for the day. So no reason to get mad or frustrated. It's all a learning experience, right? Because this trade is a trade that I learned from, that I will continue taking with me, that lesson moving forward, that will continue making me a better trader. So all in all, I'm so happy with the outcome, even though it resulted in a loss. So I'll explain it to you guys, right? So jumping right in, first and foremost, we want to look at Forex Factory to talk about what happened on Friday. So of course today is March 17th, Monday. So we just finished Monday's trading session. There wasn't a trade, but I want to review Friday's trade. So clearly we have news at 10 o'clock. So we remember that at the back of our head. So for this day, the the same exact opportunity presented itself for both the S&P and the Nasdaq 100, right? Like price broke structure at the same time and price delivered the entry at the same time. So if you guys want some homework to do, right, you can also review what happened on the Nasdaq 100 so you can see how the same exact setup played itself out on both pairs, right? Showing you that both of these pairs move in tandem, but also wanted to give you guys, of course, something to do if you're interested in trying to learn this on your own and practice, right? You can practice on your own for the Nasdaq 100 as well. So I just took the S&P because it was a setup that I just preferred at the time. So jumping right into the S&P, right? Here we are on the daily time frame. So of course, we have been very bearish for the last several weeks, right? Because you see price has just been tanking completely. However, I noticed that as price came down to this level here, you see price made a low, then price came up with this candle, filled in a gap right here, clear as day, right? There is a gap on the daily, and then came down and made a new low. However, as we see here on Friday, March 14, you see price is pushing up, getting close to clearing that high. So I noticed that if price went up and went bullish and it cleared this high right here, the high that was formed on Wednesday, March 12th, then if price blasted to this high, price would then be bullish, right? We would now be bullish on the daily time frame, which means we would have a bullish bias. But until then, we'd be bearish. But I was very aware of this level that price was also potentially considering to go bullish. But nonetheless, we still have to approach price as being bearish because until price breaks that level, break structure to the upside, we're going to be bearish. But one thing I wanted to highlight to you guys here is the pattern with the S&P on the daily time frame. So if I scroll back to some previous time, right, you can see going back to this section right here, price shot up in April of last year, price went up. And then when price came down, why did price come down? It came down to this low. Why this low? Because there was a gap that was left in price right here. So if I extend this gap out, you can clearly see this wick fills in the gap and then price continues going higher. When price goes higher and retraces, where does it retrace back to? This gap right here, right? Price taps into the gap and continues moving higher. Now with this aggressive move down, if you notice here, these lows that got formed, why did these lows form? To clear this gap right here, to fill in this gap. So the gap from September 2024, a couple months back in September, there was a gap that was left here. Price went and filled in the gap. So in my mind, I'm thinking, okay, it's very likely that price may eventually want to reverse and go bullish. But until then, I'm bearish. So you have to keep that in mind at the back of your head that we're bearish, but price may want to go bullish. Now we will jump into the 15-minute time frame. So of course, I approach this day as still being bearish because price has not broken structure to the upside or given us a sign that it wants to be bullish. So because of that, I have to approach the day as being bearish. So um, beginning things off, we want to mark off the buy side liquidity prior to 8:30. So here we have 8:30. So we look to the left of 8:30. the most obvious high would be this high right here, right? Because if we look left, this is the most recent swing high. So this is our liquidity that we've marked here. This is our point of interest. So we don't do anything until we reach that point of interest. So remember, we're bearish. So what are some targets to downside, right? Clearly, this low would be the lowest low, right, on the daily. So that would be a legitimate target if we expect price to continue going bearish. Then we see another target right here. These are obviously equal lows, right? As you can clearly see, um, this is a quote unquote double bottom or quote unquote support, right? But this is equal low. And then what do we have here? We also have fair value gap here, and then another fair value gap here. So we have reasons for price to want to go lower, right? Considering that we're bearish. That targets here and gaps that we would like to have filled. So we have both gaps. I'll just get rid of the secondary gap. Just keep this primary gap here. So this is what we're looking at on Friday. This is the potential setup that is potentially going to form, right? So because we're bearish, we're looking to take price lower, which is why we want buy side liquidity to get purged. So now as we continue moving forward, right, because now we're at 9:10, 9:15, we're gonna wait till 9:30. So here, this bullish candle is 9:30, and as you can see, there wasn't really any liquidity that got taken at 9:30. Right, 9:30 open, it didn't really clear out any of these lows, which is great, right? That's what we want to see. We want to see sell side liquidity remain intact. Then we see an aggressive push up. This candle here clears the buy side liquidity. So our confirmations are being met. We marked our liquidity pool, price came and tapped into the liquidity. So now we want to see if price gives us a break of structure. So at this point, after 9:30, this is the 9:50 to 9:55 candle. So I'm waiting to see an aggressive bearish candle, right? I'm staying on the 5-minute time frame because I want to see an aggressive bearish candle. So then when we see that, we can drop into lower time frame to see if we see any sort of break of structure lower, right? And then we'll take the trade there. So here, so have that bullish candle. Then here we have a bearish candle. So this is the 9:55 to 10 o'clock candle. It's bearish. Remember, we have news at 10 o'clock. But at this point, we see a bearish candle. So now we're jumping into lower time frame. So we don't see anything on the 4-minute, right? Because the structure point would be down here. So there's no breaks of structure. 3-minute, right? We see price come up, and this was the last structure point. Price breaks structure here, but does not leave a gap yet. So there's nothing to do. 2-minute time frame, right? Price goes up, breaks structure at this level here, and then leaves a gap at this level. So clear as day, we have a setup on the 2-minute time frame to take price lower. Now, if we were to take price lower, of course, we would take price to this level right here. And on a 1-minute time frame, we wouldn't take the trade on the 1-minute time frame because the gap that got left, right, this fair value gap would need to be formed by black candles. So clearly, there's a black candle here that where the fair value gap is created, and then the other candle that helped create the fair value gap is bullish. So we would not use the 1-minute time frame does not fit our confirmation. The 2-minute time frame does, right? And we only see a setup on the 2-minute time frame because we have it here, right? So structure was broken at this level. So this is the only time frame, right? Because on 3-minute time frame, we don't have anything yet. And then obviously the higher time frames, these are the lows. So we only have a setup on the 2-minute time frame. So this was a setup that I was basically looking at right here, right? Stop loss above the high. And then of course, because at least right now we're bearish, right? Final target would be at this level. This would be a 1 to 1.9, but of course, I don't take it to full target every time, right? I basically take a lot of partials on the way. I'm heavy with taking partials along the way. Um, One of the biggest targets here would be a 1 to 4.6, and then of course we have here 1 to 5. So obviously the risk reward is amazing. So once I seen this setup happen, I'm essentially waiting for price to tap into this point here. But then as I continue going on the 2-minute, you see an aggressive push down. Now, why did this move happen? Because guys, once again, the news at 10 o'clock, and usually what you need to remember about news will either be the excuse to grab liquidity, or it'll be the excuse to push price aggressively in the intended direction that it wants to go. So in this case, right, you see price never came up and tapped into the fair value gap. Right? Price never came in and tapped into it. Oops, sorry. Right, it didn't tap into it. It just went straight down. So my bias and everything is still intact. Now, of course, ideally, I don't want to see liquidity get taken like this, like a low to get cleared like this, because I would want that to remain a target. But nonetheless, I'm still perfectly fine with taking this trade. Why? Because this target here, these equal lows still remain intact, which is a big target. The fair value gap right here remain intact as a target. And obviously the lows down here. So you're probably thinking, why is it that I have, these imbalances and everything down here marked as targets? Well, it's because if I use the Fib tool, right, measuring the entire move from the lowest to the highest point, right, you can see under 50%, you have the equal lows right here, and you have the fair value gap. So normally, if price came down and cleared this level right here, I would close off already like 80 to 90%, and then if it tapped the fair value gap, another like 5 to 10% of the position, and then I would take my final target down here. So it won't be that like I take off, a little bit here, a little bit here, and then I save the majority of the position for the bottom. No, I take off a lot going down because I want to be more aggressive when it comes to taking partials, because I want the account to continue growing. So here, remember guys, we're on the 2 minute time frame. For the time being, I'll just leave the final target right here, right? So here we have the trade. So I'm already I have a limit order pretty much set at this level. Why? Because even if I go into higher time frame, you're not really seeing gaps. You're just seeing a long wick, right? You're not seeing anything, and you can't take a trade on a 3 minute. Why? Because the gap that was formed was further down than the displacement low to displacement high, is not within the range. So 2 minute time frame is pretty much the only time frame that I have to set up. So that's why I'm waiting here on the 2 minute time frame, and then boom right here. So price comes up and activates. So you see how price, remember we're bearish, right? And price broke structure lower. So we have not only daily bias on our side with being bearish, we also have lower time frame bias, right? Structure, order flow, which is bearish. So as you can see, price comes up, taps into the imbalance, and immediately starts rejecting the candle. So because of that, right, the way I trade is the last low that was formed prior to price going up and tapping into my entry would essentially be the low that has to get taken before I move my position to break even. So I'm waiting for this low to get cleared. I only trade through, if price trades through this level, then I would definitely take a partial. Um, but I will have to wait until price closes under this low before I move my stop loss to break even. And as you can see, this low, this is a 1 2 3. Now, with this being a risk reward of 1 to 3 risk reward, this is an absolutely amazing full target. Even if you wanted to use this as a full target, you could have, because it's a 1 to 3. Like, this is very, very solid. So the mistake that I made, well, I didn't make a mistake in the sense that I follow my strategy to the T, right? You can see price here is going in our favor. Why? Because we're bearish on the daily time frame, and you know we're taking a sell. So you see how price came down and it made its way. It almost hit our low. So I was expecting price to come up and clear this low. But as you can tell, because I took a loss, right, you can expect that price didn't come down and clear a low. If instead it went against us and took us out. So I didn't break any of my rules, because at the end of the day, we're bearish on the daily time frame. We waited for liquidity to get taken. We waited for a structure break. We enter where we need to enter, and you can see price rejecting this level, and price went really, really close to our target, which this could have served as a full target. Why? Because a 1 to 3 risk reward. Now, the reason why I still believe I mishandled the trade is because even though I followed my strategy to the T, right, I usually wait until the first low gets cleared before taking a partial and moving my stop loss to break even. I could have made an exception because of the risk reward, right? Because it's a 1 to 3 risk reward. So even if I took it like right here, the lowest that price went, it went for a 1.1 to 2.8. So that alone could have been a full target trade, right? That was more than enough. Or what I could have done is seeing that the first target is a 1 to 3. What I could have done is I could have just, you know, whenever price got to a 1 to 2, I could have closed off at least 50% of my position, right? Taking a partial, so that, 1 to 2 is a very solid risk reward. So I could have taken 50% here, or even 70, 80% of my position here. Why? Because this is still a great win. A 1 to 2 risk reward trade is a great trade to take, right? However, I was waiting for price to get to this level, and it never did. So I allowed a potential win to result in a loss. Even though, once again, guys, you have your strategy and your model in place, because it repeats and it works. So in this case, I didn't do anything wrong because I followed my strategy, and it just didn't result in a win. That's okay. But as you guys can see, right, price went down to a 1.2 to 8 risk reward. So this could have been a full target trade. Now, of course, I like to wait until liquidity gets taken, or imbalances get filled, and there wasn't really anything lower, right? Because all that was down here was just a wick. Now, I could have also used something else from ICT's teaching that I didn't fully consider, and that is um, using the consequent encroachment. So basically, what that is that when price leaves a long wick, the 50% level of that wick is usually a sensitive area. So that could have also served as a target, right? Like, if we see here, this is the Fibonacci from the high of the wick to the low of the wick. And then here we have 50%. So I'll mark it off, right, with this line right here. You'll see it. This purple line right here is the very middle of the wick, the 50% mark. So what I should have done, I should have used this as a target. Because of the risk to reward being so good, I should have avoided getting greedy, and I could have taken a strong partial right here for a 1 to 2.35 risk reward. Like, I could have taken it even 50% off, or even 70, 80% off the position right here, because then I would have had a strong winner, and then I could have walked away as a winner on this day. But instead, of course, I was waiting because I was expecting price to come lower and clear this level. Price never did. It reversed against me, and it took me out. And right, remember, I'm supposed to move my stop loss to break even after the low gets after price closes under this low, which clearly it never happened. So that's what led to me taking a full loss instead of taking, majority profits and taking a small loss, because I would have taken a strong partial, and then I would have had a smaller position open, so the loss would have just dipped into the profits for the day rather than just taking a loss. So as you guys can see, trading is quite the interesting game. And the funny part about this happening is, when this happened, I was a bit surprised because, of course, I was confident with the trade that I took. But then I told myself, it's likely very possible that price reversed against me because it actually wants to go bullish, right? That price actually wants to go bullish in the daily time frame. And the interesting part about it now is that if we fast forward after today, right? Because of course the trading session for today for me was over. You can see present day, right? That this high right here does in fact get cleared with the candle for today. As you can see, the timer is counting, right? So this is where we are at live time. So that's why I didn't take a trade on today's trading session, because there wasn't an opportunity for me to take price higher, right? So boom, you can see price gets cleared. So my theory was correct, that I, potentially took the loss because price was shifting momentum from being bearish on a daily time frame to bullish. And so that's what ultimately led to me taking a loss. But it's all a learning experience, because at the end of the day, I'm following my strategy and my model, and in this case, it didn't work out with how I had everything, which is okay, right? Your model is not gonna have 100% success rate, 100% win rate. That's okay. But in a case like this, I could have still done a better job managing the trade, just because of the risk reward itself, right? You don't always have to follow your model to the T if you have an opportunity to walk away as a winner and to win big. And oftentimes, when I do have a setup like this, um, there's usually not a risk reward that's that big on the first take profit, right? Like, this is a 1 to 3, which is supposed to be the first take profit level right here, right? The first low that gets cleared, this is where I move my stop loss to break even. When I move my stop to break even, it's usually like a 1 to 1 or a 1 to 1.2 or something, right? It's rarely ever a 1 to 3. So what I should have done is I should have, you know, taken partials. Like I should have probably even considered taking a partial right here, right? Just kind of like as it goes down, so you're not fully being greedy the entire time, right? If price is giving you the opportunity to make money and you're comfortable with the risk reward, be willing to take that off, right? Because then your account is going to continue growing and then you won't allow a winning day to be a loss, right? There's going to be some days where you're trying to take a sell, price enters, and then price continues and just blast through and you end up taking a loss, but you never had an opportunity to walk away with anything, right? Those losses are going to happen. So when you have trades like this where you have the potential to walk away and still be a big winner, right? Even before price hits your first target, do it, right? In this case, I could have managed the trade better. I could have put a target right here, and this would have been a 1 to 1.6. I could have taken off at least 20-30% of the position right here because this is a solid risk reward. Then I could have taken another partial, right, at the 50% consequent encroachment of this long wick right here for 1 to 3.6. That would have been another great partial to take. And then my account, let's just say by this point, I took off at least 50%, if not 70% of the position. Then the 30% that I have open, if price goes against me and takes me out like it did here, I still walked away with the majority of the position closed at a 1 to 2 risk reward. So whatever loss I take is just dipping into profit, and so I'm still a net winner for the day. So um, it makes sense why I took the loss here because price was actually reversing, and now we're bullish on the daily buys. So you can expect for this week and the week after and the following weeks to most likely just remain being bullish. So I'm only going to be looking for uh, buys, right? Um, but this was just a learning lesson to remind me that there's going to be moments where you can break your rules if it means, or not necessarily break them, but adjust the plan on certain days if you have a big risk reward trade that you can you know minimize your greed and just start taking partials and take what the market gives you, because that's at the end of the day, that's what trading is. You want to be able to take what the market gives you, and if it looks good, if there's an opportunity for you to take from the market, do it, right? Because it's never guaranteed. Taking partials will guarantee increase your account. There's two things that are guaranteed to happen in the market when you're trading. Guaranteed to take losses because you're guaranteed to have losing positions that will hit your stop loss. That's inevitable as traders. But when you take partials, you're guaranteed for your account to continue growing in the right direction. Now, that doesn't mean that you're going to be profitable, but it just means the second that you take a partial, that balance that you have on your account, that number will go up. That's guaranteed when you take a partial. That number will go up. So those are the only two things that's guaranteed. And so when it comes to trading, when the market gives you a move and the market gives you that, if you have the opportunity to be aggressive because you have a strong risk reward, just take what it gives you, right? And if there isn't any sort of targets, right, there's no like liquidity or um, imbalances, which are pretty much the targets that we use here, then you can also just make up your targets here, right? You can just say, oh, well, this is a massive wick. You can just ignore wick being so massive and use the bodies as the low, right, to take a partial from and move your stop loss to break even. Or you can just or you can use constant encroachment, right? You can do these things to serve as your low, because there's going to be some trades where not all trades are equal, right? So you can make adjustments throughout, and if I had done made the appropriate adjustments and managed it a little bit better, I could have walked away a winner. But that's okay, right? It's a learning experience, so we'll grow from this. And if another setup at some point in the future presents itself and looks similar to this, then I will be better prepared for that scenario, right? And I'll do a better job taking partials. And in a case like this, right, because the wick is so long, right, I could have just used the bodies as like the lows, and then once price closed under like this level right here, once price came down and closed, I could have moved my stop loss to break even, and then I could have taken strong partials because this wick, remember, this aggressive wick came because of news, and so I shouldn't have placed as great of an emphasis on it as I did, because I know news oftentimes, like, news is an excuse for manipulation to happen or for aggressive price movement to take place. So I should have um I should have not placed as great of an emphasis on the wick, because I should have known, of course, it's just news, like it's just price whiplashing, that I should have just used the low. And you know, if I seen price clear this low, like of the bodies of the candles right here at 1014, I should have moved my stop loss to break even. Should have taken a strong partial under this low, and then another strong partial at consequent encroachment right here at this level, and just manage the trade in that fashion, right? And not expect trade to clear this level with a full position, and then to also come down here and all and down here, and obviously hindsight is 2020, but you guys get the idea, right? For me, it's like I'm more comfortable going after the low hanging fruit, the easy targets, because that's much more easy for the market to hit. So learning experience here, super interesting day for setup, but the journey continues, and I wanted to share this with you guys. So if you want any homework to continue practicing and to try this on your end, you can try seeing what happened on March 14 for the NAS 100, because you'll see that the same setup played itself out on the NAS as well as the S&P. So you could have taken either pair um, on this day for a trade, for a sell, and could have potentially walked away with some money if you had taken partials along the way. So that's setup. And yeah, hope you guys enjoyed. If you enjoyed the video, do leave a like and subscribe, as I will be posting more recaps for you guys to hopefully help explain trading and to have it make sense in your mind, because I'm just so blessed to be in this position, because this is what I work towards, right? For the many years that I've been learning, right? It took me many years to finally feel as though I'm comfortable in the market and I know exactly what I'm looking for. And if the opportunity presents itself, I know it's there, and you know, I'll take the trade when I see it. So blessed to be in this position, and I'm gonna continue growing as a trader. And I want you guys to be on that journey with me, and I want to help as many people along the way as possible. So once again, enjoy the video, do the like and subscribe, as I will be posting more trade recaps and videos as we continue moving forward. So once again, guys, this is Joel, and I'm out. See you guys in the next video.